Let's get ready for the Colorado real estate exam with 100 questions covering key state laws, principles, and practices you'll need to know. And keep an eye on the bottom corner. There's something there that could make a big difference in your prep. We'll tell you how to use it in just a minute. Now, let's get started.
Let's jump right into Colorado licensing requirements and procedures. Colorado broker licensing requirements and procedures. What is the minimum age requirement for obtaining a real estate broker license in Colorado? Is it A, 18 years old, B, 19 years old, C, 20 years old, or D, 21 years old? The answer is A, 18 years old. To qualify for a real estate broker license in Colorado, applicants must be at least 18 years old. This ensures that applicants are legally recognized as adults capable of entering into contracts. How many hours of pre-licensing education are required for a Colorado real estate broker license? Is it A, 120 hours, B, 168 hours, C, 180 hours, or D, 200 hours? The answer is B, 168 hours. Colorado mandates 168 hours of pre-licensing education for prospective real estate brokers. This comprehensive training covers essential topics such as real estate principles, contracts, and legal aspects.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which of the following is a prerequisite for taking the Colorado real estate broker exam? Is it A, having a college degree, B, being a U.S. citizen, C, completing pre-licensing education, or D, holding a driver's license? The answer is C, completing pre-licensing education. Completing the required pre-licensing education is a prerequisite for taking the Colorado real estate broker exam. This ensures that candidates have the foundational knowledge necessary to succeed. Continuing education and renewal requirements. What is the minimum number of continuing education hours required for a real estate license renewal in Colorado every 3 years? Is it A, 24 hours, B, 12 hours, C, 36 hours, or D, 48 hours? The answer is A, 24 hours. In Colorado, real estate licensees must complete 24 hours of continuing education every 3 years to maintain their licenses. This ensures that professionals stay updated on industry practices and legal changes. Which of the following is a mandatory course topic for continuing education in Colorado? Is it A, marketing strategies, B, property management, C, commission update course, or D, negotiation skills? The answer is C, commission update course. The commission update course is mandatory in Colorado to ensure licensees are informed about changes in laws, rules, and practice standards. It is part of the continuing education requirements. How often must a real estate licensee in Colorado complete the commission update course? Is it A, every 2 years, B, annually, C, every 4 years, or D, every 5 years? The answer is B, annually. The commission update course must be completed annually by Colorado real estate licensees. This ensures they are up to date with the latest regulations and industry standards. If a licensee fails to complete the required continuing education in Colorado, what is one possible consequence? Is it A, increased commission rates, B, mandatory additional coursework, C, revocation of license, or D, license suspension? The answer is D, license suspension. Failing to complete the required continuing education can result in the suspension of a real estate license in Colorado. This emphasizes the importance of staying current with educational requirements. Colorado-specific exam structure and content. In the Colorado real estate licensing exam, what is the time limit for completing the state-specific portion? Is it A, 60 minutes, B, 75 minutes, C, 90 minutes, or D, 120 minutes? The answer is C, 90 minutes. The Colorado real estate licensing exam allocates a specific time limit for the state-specific portion to ensure candidates demonstrate proficiency under timed conditions. Understanding time management is crucial for success. Which of the following is a component of the Colorado real estate licensing exam? Is it A, only a national portion, B, only a state-specific portion, C, both national and state-specific portions, or D, only a practical skills test? The answer is C, both national and state-specific portions. The Colorado real estate licensing exam includes both a national portion and a state-specific portion. This ensures that candidates are knowledgeable about general real estate practices and Colorado-specific laws. What is the passing score for the Colorado real estate licensing exam? Is it A, 60%, B, 70%, C, 80%, or D, 75%? The answer is D, 75%. The passing score for the Colorado real estate licensing exam is 75%. This benchmark ensures that candidates have adequately mastered the material necessary to practice real estate in Colorado. Let's continue with Colorado real estate laws and regulations. Colorado-specific fair housing laws. Which of the following is a protected class under Colorado's fair housing laws? Is it A, age, B, sexual orientation, C, marital status, or D, military status? The answer is B, sexual orientation. Colorado's fair housing laws protect against discrimination based on sexual orientation, among other classes. This protection is in addition to federal protections, reflecting the state's commitment to inclusivity. What is the penalty for a first-time violation of Colorado's fair housing laws? Is it A, $5,000, B, $15,000, C, $10,000, or D, $20,000? The answer is C, $10,000. A first-time violation of Colorado's fair housing laws can result in a fine up to $10,000. This penalty is intended to deter discriminatory practices and enforce compliance. Under Colorado fair housing laws, which action is considered discriminatory? Is it A, refusing to rent to someone because of their disability, B, setting a higher rent for a larger apartment, C, requiring a security deposit, or D, offering discounts to long-term tenants? The answer is A, refusing to rent to someone because of their disability. Refusing to rent to someone because of their disability is a discriminatory action under Colorado's fair housing laws, which aim to ensure equal housing opportunities for all individuals. In Colorado, which entity is primarily responsible for enforcing fair housing laws? Is it A, Federal Housing Administration, B, Colorado Civil Rights Division, C, Department of Housing and Urban Development, or D, Colorado Real Estate Commission? The answer is B, Colorado Civil Rights Division. The Colorado Civil Rights Division is tasked with enforcing fair housing laws, ensuring compliance, and addressing complaints related to discrimination in housing. What must a landlord in Colorado provide to a tenant with a disability under fair housing laws? Is it A, free rent, B, priority parking, C, 24-hour maintenance service, or D, reasonable modifications at tenant's expense? The answer is D, Reasonable modifications at tenants' expense. Landlords must allow reasonable modifications for disabled tenants, such as installing ramps, provided the tenant pays for them. This ensures accessibility without imposing undue financial burdens on the landlord. Which of the following actions is prohibited under Colorado's fair housing laws when dealing with potential renters? Is it A, offering a discount to early applicants? B, refusing to rent to someone with a poor credit history? C, refusing to rent based on national origin? Or D, requesting references from previous landlords? The answer is C, refusing to rent based on national origin. Colorado fair housing laws prohibit landlords from refusing to rent based on race, color, religion, sex, disability, familial status, or national origin. Discriminatory advertising is also prohibited.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Colorado-specific contract requirements. What is the purpose of the Colorado Real Estate Commission's approved forms for real estate transactions? Is it A, to ensure compliance with state laws and reduce disputes? B, to allow real estate agents to modify terms freely? C, to increase the commission rates for real estate agents? Or D, to replace the need for legal counsel? The answer is A, to ensure compliance with state laws and reduce disputes. The Colorado Real Estate Commission provides approved forms to ensure compliance with state laws, reduce disputes, and protect both parties by clarifying terms and conditions in real estate transactions. In Colorado, which of the following is a mandatory disclosure in real estate contracts? Is it A, the seller's personal financial history? B, the buyer's intended use of the property? C, known material defects of the property? Or D, the previous sale price of the property? The answer is C, known material defects of the property. Colorado requires sellers to disclose known material defects in the property, ensuring buyers are informed of significant issues that could affect their decision to purchase. What is the role of the inspection objection deadline in a Colorado real estate contract? Is it A, to finalize the sale of the property? B, to allow buyers to object to inspection findings and negotiate repairs? C, to require sellers to lower the sale price? Or D, to confirm the buyer's financing approval? The answer is B, to allow buyers to object to inspection findings and negotiate repairs. The inspection objection deadline allows buyers to raise concerns about inspection findings within a specified period, enabling negotiation or withdrawal if issues are significant. Which of the following is true regarding earnest money deposits in Colorado real estate transactions? Is it A, earnest money is non-refundable under any circumstances? B, earnest money is paid directly to the seller? C, earnest money is used to pay real estate agent commissions? Or D, earnest money is held in escrow and may be refundable? The answer is D, earnest money is held in escrow and may be refundable. Earnest money is held in escrow and demonstrates the buyer's commitment to the transaction. It is refundable under certain conditions, such as contract contingencies not being met. What is the significance of the closing date in a Colorado real estate contract? Is it A, it is the date when the ownership and financial transactions are completed? B, it is the date by which the buyer must secure financing? C, it is the date when the property is first listed for sale? Or D, it is the date when the inspection must be completed? The answer is A, it is the date when the ownership and financial transactions are completed. The closing date is the agreed-upon date when the sale is finalized, ownership is transferred, and financial obligations are settled. It is a critical component of the contract timeline. What is the primary function of the lead-based paint disclosure in Colorado real estate transactions? Is it A, to calculate property taxes, B, to inform buyers of potential lead hazards, C, to estimate the property's market value, or D, to determine the property's flood risk? The answer is B, to inform buyers of potential lead hazards. The lead-based paint disclosure is required for properties built before 1978 to inform buyers of potential lead hazards. It ensures buyers are aware of any risks associated with lead-based paint. Which party is responsible for completing the seller's property disclosure in a Colorado real estate transaction? Is it A, the seller, B, the buyer, C, the real estate agent, or D, the title company? The answer is A, the seller. The seller is responsible for completing the seller's property disclosure, providing accurate information about the property's condition and any known defects to potential buyers. Now let's review Colorado property ownership and land use. Types of property ownership, e.g. fee simple, leasehold, joint tenancy. In Colorado, which type of property ownership allows the owner to possess the property indefinitely and is the most complete form of ownership? Is it A, fee simple, B, leasehold, C, joint tenancy, or D, tenancy in common? The answer is A, fee simple. Fee simple ownership grants the owner the fullest rights to the property, including the right to sell, lease, or bequeath it. This type of ownership is not limited by time. What distinguishes joint tenancy from tenancy in common in Colorado property ownership? Is it A, duration of ownership, B, number of owners, C, right of survivorship, or D, division of interest? The answer is C, right of survivorship. Joint tenancy includes the right of survivorship, meaning if one owner dies, their interest passes to the surviving owners. Tenancy in common does not automatically transfer interest upon death. Which form of property ownership in Colorado requires all owners to agree for a sale to proceed? Is it A, fee simple, B, leasehold, C, tenancy in common, or D, joint tenancy? The answer is D, joint tenancy. In joint tenancy, all owners must agree to sell the entire property. In tenancy in common, each owner can sell their share independently. How does a leasehold estate differ from a fee simple estate in Colorado? Is it A, ownership rights, B, duration of control, C, transferability, or D, legal responsibilities? The answer is B, duration of control. A leasehold estate grants possession and use for a limited time as per the lease agreement, while fee simple ownership is permanent and provides complete control over the property. In Colorado, what happens to a joint tenant's interest in a property upon their death? Is it A, it becomes part of the estate, B, it is sold to the highest bidder, C, it transfers to the surviving owners, or D, it is divided among heirs? The answer is C, it transfers to the surviving owners. With joint tenancy, the deceased owner's interest automatically passes to the surviving joint tenants, rather than being inherited by heirs or beneficiaries.
Notice the code in the corner? When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Which type of property ownership in Colorado allows multiple owners to have equal shares and includes the right of survivorship? Is it A, joint tenancy, B, tenancy in common, C, fee simple, or D, leasehold? The answer is A, joint tenancy. Joint tenancy allows multiple owners to hold equal shares in a property with the right of survivorship, meaning upon one owner's death, their share automatically transfers to the surviving owners. In Colorado, which type of property ownership involves a temporary right to use and occupy land or property? Is it A, fee simple, B, joint tenancy, C, tenancy in common, or D, leasehold? The answer is D, leasehold. A leasehold estate grants the lessee the right to use and occupy the property for a specified period under terms agreed upon in a lease agreement. Public versus private land use controls. Which of the following is a primary purpose of zoning laws in Colorado? Is it A, to increase property taxes, B, to separate incompatible land uses, C, to manage water rights, or D, to enforce building codes? The answer is B, to separate incompatible land uses. Zoning laws are designed to control land use, ensuring orderly development and separating incompatible land uses, such as industrial and residential areas, to maintain community welfare. What is the role of a homeowners association in private land use controls? Is it A, to oversee city zoning regulations, B, to manage public parks, C, to enforce community-specific rules, or D, to regulate state highways? The answer is C, to enforce community-specific rules. HOAs enforce covenants, conditions, and restrictions, CC&Rs, to maintain property values and community standards, regulating aspects like property appearance and use within a development. How do easements affect property ownership in Colorado? Is it A, they grant usage rights without ownership transfer, B, they transfer full ownership to another party, C, they are used to determine property taxes, or D, they are temporary land leases? The answer is A, they grant usage rights without ownership transfer. Easements allow others to use part of a property for a specific purpose, such as utility access, without transferring ownership, impacting how the property can be used. What is a variance in the context of public land use controls? Is it A, a change in property ownership, B, a tax exemption for developers, C, a temporary land use permit, or D, a legal exception to zoning rules? The answer is D, a legal exception to zoning rules. A variance is a legal exception to zoning ordinances, allowing property owners to use land in a way that deviates from zoning requirements, typically granted for hardship cases. In Colorado, what is the primary function of a conservation easement? Is it A, to increase agricultural productivity, B, to preserve natural resources, C, to enhance commercial development, or D, to facilitate residential zoning changes? The answer is B, to preserve natural resources. Conservation easements restrict land development to preserve natural resources, biodiversity, and open space, maintaining environmental benefits while the land remains privately owned. What is the primary function of a building permit in Colorado? Is it A, to increase property taxes, B, to facilitate property sales, C, to ensure compliance with zoning and safety codes, or D, to provide legal ownership of land? The answer is C, to ensure compliance with zoning and safety codes. A building permit ensures that construction projects comply with local zoning, land use, and building codes, safeguarding public health and safety by preventing unsafe structures. Land use and zoning laws. What is the primary purpose of zoning laws in Colorado? Is it A, to increase property taxes, B, to regulate land use and development, C, to promote tourism, or D, to provide funding for infrastructure? The answer is B, to regulate land use and development. Zoning laws are designed to regulate land use, ensuring that development is orderly and compatible with community goals. They help prevent conflicts between different land uses, such as residential and industrial. Which of the following is a common type of zoning classification in Colorado? Is it A, residential, B, agricultural, C. Recreational, or D. Utility? The answer is A. Residential. Residential zoning is a common classification that designates areas for housing, including single-family homes and apartments, distinguishing them from commercial or industrial uses. In Colorado, what is a variance in the context of zoning laws? Is it A. a change in property ownership, B. a reclassification of zoning type, C. an exception to zoning requirements, or D. a temporary suspension of zoning laws? The answer is C. an exception to zoning requirements. A variance is an exception to zoning laws, allowing property owners to use land in a way that deviates from zoning requirements, typically granted when strict enforcement would cause undue hardship. What role do comprehensive plans play in Colorado's land use planning? Is it A. they enforce zoning regulations, B. they determine property tax rates, C. they provide legal defense for zoning disputes, or D. they outline long-term community development goals? The answer is D. They outline long-term community development goals. Comprehensive plans guide long-term development, outlining community goals and policies for land use, housing, transportation, and public services, ensuring coordinated growth and resource management. Condominiums and common interest communities. What is the primary purpose of the Colorado Common Interest Ownership Act? Is it A. to provide a comprehensive framework for managing common interest communities, B. to regulate the sale of all types of property in Colorado, C. to standardize property taxes across Colorado, or D. to ensure that all property developments are environmentally sustainable? The answer is A. to provide a comprehensive framework for managing common interest communities. The CCIOA was enacted to provide a comprehensive framework for the creation, management, and termination of common interest communities, ensuring uniformity and protection for owners and associations. In a Colorado condominium, who is typically responsible for maintaining the common areas? Is it A. individual unit owners, B. the homeowners association, C. the local government, or D. a property management company hired by the city? The answer is B. the homeowners association. The homeowners association is generally responsible for maintaining common areas in a condominium as outlined in the community's governing documents. Which of the following is a characteristic of a common interest community in Colorado? Is it A. individual ownership of all land and structures, B. no shared facilities or responsibilities, C. shared ownership or use of common areas, or D. exemption from local zoning laws? The answer is C. shared ownership or use of common areas. A common interest community is defined by shared ownership or use of common areas, which are maintained by an association funded by assessments from the owners. How does the CCIOA affect the creation of new condominiums in Colorado? Is it A. it limits the number of units that can be built, B. it mandates that all units be sold before construction begins, C. it requires all units to be environmentally certified, or D. it establishes guidelines for governance and buyer disclosures? The answer is D. It establishes guidelines for governance and buyer disclosures. The CCIOA provides regulations for the creation, management, and governance of condominiums, ensuring developers follow specific procedures and provide necessary disclosures to buyers. Environmental issues and water rights. What is the doctrine that governs water rights in Colorado? Is it A. riparian rights, B. prior appropriation, C. equitable distribution, or D. littoral rights? The answer is B. prior appropriation. Colorado follows the doctrine of prior appropriation, which allocates water rights based on first in time, first in right. This means earlier users have priority over later ones during shortages. Which of the following is a primary environmental concern related to property ownership in Colorado? Is it A, hurricanes, B, earthquakes, C, radon, or D? The answer is C, gas. Radon is a significant concern in Colorado due to the state's geology. It is a naturally occurring radioactive gas that can accumulate in homes, posing health risks. In Colorado, how is the right to use water typically established? Is it A, water court decree, B, land ownership, C, state permit, or D, federal license? The answer is A, water court decree. The right to use water in Colorado is established through a water court decree, which legally recognizes the priority and amount of water one is entitled to use. What is the primary legal framework governing land use planning in Colorado? Is it A, federal zoning laws, B, local zoning laws, C, statewide building codes, or D, Environmental Protection Act? The answer is B, local zoning laws. Colorado's land use planning is primarily governed by local zoning laws, which dictate how land can be used in different areas, ensuring organized development and land use. Let's continue with a review of Colorado agency law and ethics. Agency relationship laws and disclosures. In Colorado, which of the following actions is required for a real estate broker to establish an agency relationship with a buyer? Is it A, oral agreement with the buyer, B, disclosure of agency duties, C, written agreement with the buyer, or D, providing marketing materials? The answer is C, written agreement with the buyer. To establish an agency relationship in Colorado, a broker must have a written agreement with the buyer. This ensures clarity and legal recognition of the agency relationship and obligations. What must a Colorado real estate broker do if they intend to act as a transaction broker for both the buyer and seller? Is it A, provide written disclosure to both parties, B, obtain verbal consent from both parties, C, act as a dual agent, or D, represent only the buyer? The answer is A, provide written disclosure to both parties. In Colorado, a broker must provide a written disclosure to both parties, indicating their role as a transaction broker, which involves facilitating the transaction without representing either party. Which duty is not included in a Colorado real estate broker's obligations under an agency relationship? Is it A, loyalty to the client, B, setting the sale price, C, confidentiality, or D, disclosure of material facts? The answer is B, setting the sale price. Confidentiality, loyalty, and disclosure are among the duties owed by a broker. However, setting the sale price is the client's decision, not the broker's duty. When must a Colorado real estate broker provide the brokerage disclosure to buyer form? Is it A, after the buyer makes an offer, B, at the closing of the transaction, C, when the buyer signs a purchase agreement, or D, before showing a specific property? The answer is D, before showing a specific property. The brokerage disclosure to buyer form must be provided before any confidential information is shared or a specific property is shown, ensuring the buyer understands the broker's role.
Stuck on a question? Just think of the Birdsy link in the description as your friendly neighborhood superhero, swooping in to save the day with answers. Feel free to explore it now and return to continue. Simply hit pause, and we'll be waiting when you get back.
Fiduciary duties and client representation. In Colorado, what is the primary duty of a real estate agent when representing a client? Is it A, to maximize the agent's commission, B, to follow only the client's instructions, C, to act in the best interest of the client, or D, to maintain a neutral position between buyer and seller? The answer is C, to act in the best interest of the client. The primary duty of a real estate agent in Colorado is to act in the best interest of the client, ensuring loyalty and confidentiality. This includes disclosing all material facts and avoiding conflicts of interest. Which fiduciary duty requires a Colorado real estate agent to keep the client's information confidential? Is it A, B, confidentiality, C, disclosure, or D, obedience? The answer is B, confidentiality. The duty of confidentiality obligates agents to protect their clients' private information. This duty survives the termination of the agency relationship, safeguarding the client's interests. What is the consequence if a Colorado real estate agent breaches their fiduciary duty of loyalty? Is it A, the agent may face legal action and loss of license? B, the agent can continue representing the client? C, the client must forgive the breach? Or D, no consequences if the breach was unintentional? The answer is A, the agent may face legal action and loss of license. Breaching the duty of loyalty can lead to legal action against the agent, including potential loss of license and financial penalties, as loyalty is fundamental to the client-agent relationship. In Colorado, which duty requires real estate agents to disclose all known material facts to their clients? Is it A, confidentiality, B, obedience, C, or D, disclosure? The answer is D, disclosure. The duty of disclosure mandates agents to inform clients about all material facts that could affect the transaction, ensuring clients make informed decisions. Colorado Ethics Guidelines and Enforcement. What is the primary purpose of the Colorado Real Estate Commission's enforcement of ethics guidelines? Is it A, to increase real estate sales, B, to protect consumers and ensure integrity, C, to provide marketing strategies, or D, to set property prices? The answer is B, to protect consumers and ensure integrity. The Commission ensures the integrity of the real estate profession by enforcing ethical standards, protecting consumers, and maintaining public trust in real estate transactions. Which of the following actions may lead to disciplinary action by the Colorado Real Estate Commission? Is it A, attending a continuing education course, B, using a lockbox for property access, C, failing to disclose a conflict of interest, or D, advertising a property for sale? The answer is C, failing to disclose a conflict of interest. Failing to disclose a conflict of interest violates ethical guidelines and can result in disciplinary measures to maintain transparency and trust in real estate dealings. Which ethical principle requires Colorado real estate agents to act in the best interests of their clients? Is it A, fiduciary duty, B, market analysis, C, conflict resolution, or D, contract negotiation? The answer is A, fiduciary duty. Fiduciary duty obligates agents to prioritize their clients' interests above their own, ensuring loyalty, confidentiality, and full disclosure in transactions. How does the Colorado Real Estate Commission ensure compliance with ethical guidelines? Is it A, by setting property taxes, B, by offering financial incentives, C, by conducting real estate courses, or D, by auditing and investigating violations? The answer is D, by auditing and investigating violations. The Commission conducts audits and investigations to ensure compliance, addressing violations through disciplinary actions to uphold ethical standards. Now let's test your understanding of Colorado property valuation. Basic principles of property valuation. What is the principle of substitution in property valuation? Is it A, the value is based on future income potential, B, the value is determined by the original purchase price, C, the value is determined by the cost of an equally desirable substitute property, Or D, the value is based on the property's historical significance? The answer is C. The value is determined by the cost of an equally desirable substitute property. The principle of substitution states that a property's value is determined by the cost of acquiring an equally desirable substitute property. This principle is fundamental in real estate appraisal. Which principle suggests that the value of a property is affected by the presence of nearby properties? Is it A, principle of externalities, B, principle of progression, C, principle of regression, or D, principle of anticipation? The answer is A, principle of externalities. The principle of externalities or neighborhood influences states that a property's value can be affected by the conditions and characteristics of surrounding properties. How does the principle of contribution affect property valuation? Is it A, it determines value based on replacement cost, B, it uses the original construction cost to determine value, C, it evaluates the property's potential income, or D, it assesses the added value of a property feature? The answer is D. It assesses the added value of a property feature. The principle of contribution states that the value of a property feature or component is determined by how much it adds to the overall property value, not by its cost. What does the principle of highest and best use entail? Is it A, the current use of the property, B, the most profitable and legal use of the property, C, the use that requires the least investment, or D, the use that aligns with community standards? The answer is B, the most profitable and legal use of the property. The principle of highest and best use refers to the most profitable, legally permissible, physically possible, and financially feasible use of a property, which maximizes its value. Sales comparison, cost, and income approaches. Which approach to property valuation is most appropriate when valuing a single-family home in a well-established neighborhood in Colorado? Is it A, sales comparison approach, B, cost approach, C, income approach, or D, market analysis approach? The answer is A, sales comparison approach. The sales comparison approach is ideal for single-family homes in established neighborhoods because it uses recent sales of similar properties to estimate value, reflecting current market conditions. When using the cost approach for property valuation, what is a key factor that must be considered? Is it A, comparable sales, B, appreciation, C, capitalization rate, or D, market trends? The answer is B, depreciation. Depreciation is crucial in the cost approach as it accounts for the loss of value over time, ensuring the estimated cost reflects the property's current condition and market value. In the income approach to valuation, what does the capitalization rate represent? Is it A, the rate of property tax, B, the rate of market appreciation, C, the rate of return on investment, or D, the rate of depreciation? The answer is C, the rate of return on investment. The capitalization rate, or cap rate, represents the expected rate of return on an investment property, calculated by dividing the annual net operating income by the purchase price. Which of the following is a limitation of the sales comparison approach? Is it A, it requires extensive cost data, B, it is time-consuming to apply, C, it relies on income data, or D, it depends on comparable sales data? The answer is D, it depends on comparable sales data. The sales comparison approach is limited by the availability of recent, similar property sales data, which can be scarce in less active markets or unique property types.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Now let's take a look at Colorado real estate financing. Mortgage loans and financing options. What is the primary purpose of a deed of trust in Colorado mortgage transactions? Is it A, to transfer ownership of the property? B, to establish the loan terms and conditions? C, to secure the loan by transferring title to a trustee? Or D, to provide insurance for the mortgage? The answer is C, to secure the loan by transferring title to a trustee. A deed of trust is a security instrument in Colorado that involves three parties: the borrower, lender, and trustee. It secures the loan by transferring the title to the trustee until the loan is paid. Which financing option is typically used for homebuyers with a low credit score in Colorado? Is it A, Federal Housing Administration (FHA) loan? B, conventional loan? C, U.S. Department of Veterans Affairs (VA) loan? Or D, jumbo loan? The answer is A, Federal Housing Administration (FHA) loan. FHA loans are designed for borrowers with lower credit scores, offering lower down payments and flexible qualification requirements, making them accessible to more homebuyers. How does a fixed-rate mortgage differ from an adjustable-rate mortgage in Colorado? Is it A, fixed-rate mortgages have lower initial interest rates? B, fixed-rate mortgages have consistent interest rates throughout the term? C, adjustable-rate mortgages are only available for short-term loans? Or D, adjustable-rate mortgages guarantee lower total interest costs? The answer is B, fixed-rate mortgages have consistent interest rates throughout the term. Fixed-rate mortgages maintain the same interest rate throughout the loan term, providing stable payments, while adjustable-rate mortgages have rates that can change, affecting payment amounts. What is the role of private mortgage insurance in a Colorado mortgage? Is it A, to reduce the interest rate on the loan? B, to increase the loan term? C, to eliminate the need for a down payment? Or D, to protect the lender in case of borrower default? The answer is D, to protect the lender in case of borrower default. PMI protects lenders by covering a portion of the loan if the borrower defaults, typically required when the down payment is less than 20% of the home's value. Loan applications and approval processes. What is the primary purpose of the loan estimate form in Colorado's loan application process? Is it A, to finalize the loan agreement? B, to assess the borrower's creditworthiness? C, to provide detailed loan cost information? Or D, to determine property value? The answer is C, to provide detailed loan cost information. The loan estimate form provides borrowers with important details about their loan, including estimated interest rates, monthly payments, and closing costs, helping them understand and compare the financial implications of their mortgage options. In Colorado, which document must lenders provide to borrowers within 3 business days of receiving a mortgage application? Is it A, loan estimate? B, closing disclosure? C, good faith estimate? Or D, truth in lending disclosure? The answer is A, loan estimate. The loan estimate must be provided within 3 business days after receiving a mortgage application, ensuring borrowers have timely information to compare loan offers and make informed decisions. What is the role of an underwriter in the Colorado loan approval process? Is it A, to appraise the property value? B, to assess the borrower's risk and approve loans? C, to negotiate interest rates with borrowers? Or D, to prepare closing documents? The answer is B, to assess the borrower's risk and approve loans. Underwriters evaluate the risk of lending to a borrower by assessing their financial information, ensuring compliance with lender guidelines and regulations, and ultimately deciding whether to approve or deny the loan application. Which factor is not typically considered by lenders during the loan approval process in Colorado? Is it A, credit score, B, income level, C, debt-to-income ratio, or D, personal lifestyle preferences? The answer is D, personal lifestyle preferences. Lenders evaluate a borrower's credit score, income, and debt-to-income ratio to assess financial stability and repayment ability. Personal preferences, like lifestyle choices, are not considered in the loan approval process. Colorado mortgage disclosure requirements. What is a key requirement of the Colorado mortgage disclosure regarding interest rates? Is it A, it must list historical interest rates, B, it must compare rates with other lenders, C, it must specify if the rate is fixed or adjustable, or D, it must predict future interest rates? The answer is C, it must specify if the rate is fixed or adjustable. Colorado law mandates that the mortgage disclosure must clearly state the interest rate, whether it is fixed or adjustable, and any conditions under which it might change. Which document is essential for compliance with Colorado's mortgage disclosure requirements? Is it A, the good faith estimate, B, the loan estimate, C, the HUD-1 settlement statement, or D, the truth in lending disclosure? The answer is B, the loan estimate. The loan estimate form is a critical document that provides borrowers with detailed information about loan terms, projected payments, and closing costs, ensuring transparency and compliance in Colorado. How soon must a lender provide the loan estimate to a borrower under Colorado law? Is it A, within 3 business days after receiving the application, B, within 5 business days after receiving the application, C, within 1 week after receiving the application, or D, on the day of the loan closing? The answer is A, within 3 business days after receiving the application. Under Colorado law, lenders must provide the loan estimate within 3 business days after receiving a mortgage application to ensure borrowers have ample time to review the terms. What information about closing costs must be included in the Colorado loan estimate? Is it A, only lender fees, B, only third-party fees, C, only prepaid items, or D, a comprehensive list of all closing costs? The answer is D, a comprehensive list of all closing costs. The loan estimate must provide a detailed breakdown of closing costs, including lender fees, third-party fees, and prepaid items, to ensure the borrower is fully informed. Colorado-specific loan programs. Which Colorado-specific loan program is designed to assist first-time homebuyers with down payment assistance? Is it A, CHFF, B, U.S. Department of Veterans Affairs, VA loan, C, Federal Housing Administration, FHA loan, or D, conventional loan? The answer is A, CHFA. The Colorado Housing and Finance Authority offers programs to assist first-time homebuyers with down payment assistance. This helps reduce the upfront costs of purchasing a home, making it more accessible for new buyers. What is a key feature of the Colorado Housing and Finance Authority's Smart Step Plus program? Is it A, no credit score requirement, B, down payment assistance grant, C, zero closing costs, or D, adjustable interest rates? The answer is B, down payment assistance grant. The CHFA Smart Step Plus program offers a competitive interest rate with a grant for down payment assistance, making it an attractive option for those needing financial support to purchase a home. Which program is specifically tailored for teachers and public employees in Colorado seeking to purchase a home? Is it A, CHFA, B, Federal Housing Administration, FHA loan, C, U.S. Department of Veterans Affairs, VA loan, or D, CHA teacher program? The answer is D, CHA teacher program. The Colorado Housing Assistance Corporation offers a program specifically for teachers and public employees, providing financial resources to help them afford a home in the communities they serve. What is the primary benefit of the CHFA Preferred Program for Colorado homebuyers? Is it A, no down payment required, B, flexible credit requirements, C, lower mortgage insurance premiums, or D, subsidized interest rates? The answer is C, lower mortgage insurance premiums. The CHFA Preferred Program offers lower mortgage insurance premiums compared to standard loans, reducing monthly payments for borrowers and making homeownership more affordable in the long term.
Notice the code in the corner? When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Colorado Housing and Finance Authority. What is the primary purpose of the Colorado Housing and Finance Authority? Is it A, to regulate real estate transactions in Colorado, B, to manage public housing in Colorado, C, to provide financial assistance for affordable housing and business development, or D, to enforce state housing codes? The answer is C, to provide financial assistance for affordable housing and business development. CHFA is designed to provide financial assistance for affordable housing and business development. It helps increase access to capital for home buyers and developers, supporting economic growth in Colorado. Which type of loan is primarily offered by CFA to assist first-time homebuyers in Colorado? Is it A, low-interest mortgage loans with down payment assistance, B, variable rate loans with no down payment options, C, commercial real estate loans, or D, home equity lines of credit? The answer is A, low-interest mortgage loans with down payment assistance. CHFA offers various mortgage loan programs aimed at first-time homebuyers, including down payment assistance and low-interest loans, making homeownership more accessible for Colorado residents. How does CHFA support the development of affordable rental housing in Colorado? Is it A, by providing grants to tenants directly, B, by allocating low-income housing tax credits to developers, C, by enforcing rent control policies, or D, by managing public housing units? The answer is B, by allocating low-income housing tax credits to developers. CFA allocates low-income housing tax credits to developers, incentivizing the construction and rehabilitation of affordable rental housing, thereby increasing the availability of such housing in Colorado. What is a key benefit of CHFA's homebuyer education classes for potential homeowners? Is it A, they guarantee loan approval, B, they offer direct financial assistance, C, they reduce the interest rate on CFA loans, or D, they prepare buyers for the responsibilities of homeownership? The answer is D, they prepare buyers for the responsibilities of homeownership. CFA's homebuyer education classes help potential homeowners understand the home buying process, financial responsibilities, and how to maintain their homes, which is essential for successful long-term homeownership. Now let's take a look at some Colorado disclosure requirements and forms. Colorado-specific disclosure requirements. What is the primary purpose of the Colorado Seller's Property Disclosure Form? Is it A, to disclose the property's condition and known issues to the buyer, B, to evaluate the property's market value, C, to determine the property's tax assessment, or D, to negotiate the terms of the sale? The answer is A, to disclose the property's condition and known issues to the buyer. The Seller's Property Disclosure Form in Colorado is designed to inform potential buyers about the property's condition and any known issues. This helps buyers make informed decisions and protects sellers from future disputes. Which of the following is a required disclosure for sellers under Colorado law? Is it A, the seller's financial history, B, the buyer's credit score, C, any known environmental hazards, or D, the property's future market value? The answer is C, any known environmental hazards. Colorado law requires sellers to disclose any known environmental hazards, such as lead-based paint, to ensure buyers are aware of potential health risks associated with the property. What must a seller disclose if their property is part of a homeowners association in Colorado? Is it A, the HOA president's contact information, B, the existence of the HOA and any associated fees, C, the HOA's financial statements, or D, the HOA's meeting minutes from the past year? The answer is B, the existence of the HOA and any associated fees. Sellers in Colorado must disclose the existence of an HOA, including any fees and governing documents, to ensure buyers understand their obligations and community rules before purchasing. When is a lead-based paint disclosure required in Colorado real estate transactions? Is it A, for all properties regardless of age, B, only for commercial properties, C, for properties built after 1990, or D, for properties built before 1978? The answer is D, for properties built before 1978. A lead-based paint disclosure is mandatory for properties built before 1978, as these homes are more likely to contain lead-based paint, posing health risks to occupants. Commonly used Colorado forms. Which of the following forms is used in Colorado to disclose the relationship between a real estate broker and their client? Is it A, contract to buy and sell real estate, B, brokerage disclosure to buyer-tenant, C, seller's property disclosure, or D, lead-based paint disclosure? The answer is B, brokerage disclosure to buyer-tenant. The brokerage disclosure to buyer-tenant form is used in Colorado to clearly disclose the nature of the relationship between a real estate broker and their client, ensuring transparency and compliance with state laws. What is the primary purpose of the Colorado seller's property disclosure form? Is it A, to establish the purchase price of the property, B, to provide a legal description of the property, C, to inform buyers of the property's condition and defects, or D, to outline the terms of the listing agreement? The answer is C, to inform buyers of the property's condition and defects. The seller's property disclosure form in Colorado is designed to inform potential buyers about the condition of the property, detailing any known issues or defects, to promote informed decision-making and transparency in real estate transactions. In Colorado, what must a seller disclose if the property was built before 1978? Is it A, lead-based paint disclosure, B, radon gas disclosure, C, mold disclosure, or D, flood zone disclosure? The answer is A, lead-based paint disclosure. Federal law requires sellers of properties built before 1978 to disclose any known information about lead-based paint hazards due to the potential health risks associated with lead exposure, particularly in older homes. Which Colorado form is used to outline the terms and conditions of a real estate transaction between a buyer and a seller? Is it A, brokerage duties disclosure, B, seller's property disclosure, C, exclusive right to sell listing contract, or D, contract to buy and sell real estate? The answer is D, contract to buy and sell real estate. The contract to buy and sell real estate is the primary document used in Colorado to outline the terms, conditions, and responsibilities of both parties in a real estate transaction, ensuring legal clarity and mutual agreement. Specific procedures for transactions. What is the primary purpose of the Colorado seller's property disclosure form? Is it A, to inform potential buyers about the condition of the property. B. To establish the property's market value. C. To negotiate the final sale price. Or D. To verify the buyer's financing eligibility. The answer is A. To inform potential buyers about the condition of the property. The Colorado Seller's Property Disclosure Form is designed to inform potential buyers about the condition of the property, including any known defects or issues, to facilitate informed decision-making. Which of the following is a required disclosure for sellers in Colorado? Is it A. The presence of asbestos in roofing materials? B. The presence of lead-based paint if the home was built before 1978? C. The previous owner's criminal history? Or D. The energy efficiency rating of the property? The answer is B. The presence of lead-based paint if the home was built before 1978. Sellers in Colorado must disclose the presence of lead-based paint if the property was built before 1978, as per federal law, to protect buyers from potential health hazards. What is the role of the Colorado Real Estate Commission's approved forms in real estate transactions? Is it A. To determine the commission rate for realtors? B. To appraise the property's market value? C. To facilitate private agreements between buyers and sellers? Or D. To ensure consistency and compliance with state laws? The answer is D. To ensure consistency and compliance with state laws. The Colorado Real Estate Commission's approved forms ensure consistency and compliance with state laws, providing a standardized framework for real estate transactions to protect all parties involved. How does the Colorado Brokerage Disclosure to Buyer form benefit a potential buyer? Is it A. By guaranteeing the lowest market price? B. By clarifying the broker's role and relationship with the buyer? C. By providing a detailed property inspection report? Or D. By outlining the buyer's financing options? The answer is B. By clarifying the broker's role and relationship with the buyer. The Colorado Brokerage Disclosure to Buyer form clarifies the broker's role, whether as a buyer's agent, seller's agent, or transaction broker, ensuring the buyer understands the relationship and any potential conflicts.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.